Good morning. I'm Brian Tugend, and this is Markets in a Minute for the week of April 13th. Equity markets got a welcome boost last week as President Trump's Tuesday night deadline for Iran ended with a questionable two-week ceasefire. This sent equity markets soaring across the globe and brought the S&P 500 back to roughly break even for the year by week's end. Global equities also retraced a good chunk of their March declines as oil supply concerns eased and the dollar slid versus both developed and emerging market currencies. On Wednesday alone, investors saw emerging market stocks rally by 5.5%, while non-US developed stocks rose 4.7%. Not surprisingly, we also saw a sizable pullback in the price of WTI crude oil. Early in the week, WTI sat at over $110 per barrel. It tumbled to nearly $90 per barrel following the announcement Tuesday evening, only to settle around $100 on Friday. While this news is encouraging, there is still a great level of uncertainty around the U.S.-Iran conflict and in particular the status of the Strait of Hormuz. While the terms of the ceasefire included the opening of the strait, traffic was still very limited as of Friday. Outside of Iran-linked ships driving most of the traffic, there were only a handful of commercial vessels that had cleared the key shipping route. As talks of resolution continue, this will be a key area to watch because it is one of the main sources of recent market volatility, and any developments could have a meaningful impact on global commodity prices and equity markets. Next, to continue on the theme of commodity prices, the greatest fear for many has been the potential impact that higher oil prices would have on near-term inflation. We got our first look at that impact on Friday, and as expected, the month-over-month CPI reading for March jumped by 0.9%, its hottest print since mid-2022. Not surprisingly, the key contributor here was energy, which contributed 0.7% to overall inflation. On a positive note, however, other categories saw relatively benign inflation with a slight decline in food prices. Additionally, the core number, which tends to be less volatile given that it excludes food and energy, came in at 0.2% on a month-over-month basis, which was a tick lighter than expectations. The big question that remains is whether or not the recent uptick in inflation will in fact be transitory this time around. Assuming the Middle East conflict does come to a speedy resolution, this is likely to be the case. Inflation in this instance is largely caused by supply disruptions rather than excessive demand, which is much of the opposite of what we saw in 2022. Markets appear to generally agree with this assessment. Now, since just Wednesday, we've seen a massive repricing in two-year break-even rates. After spiking to nearly 3.4% mid-month, inflation expectations have now moved below 2.9%. This is still well above where we started the year, but generally in line with the levels we saw for much of 2025. Looking ahead to this week, investors will be hanging on every bit of news as it relates to the fragile ceasefire agreement and any changes to the status of the Strait of Hormuz. On the economic front, it will be relatively light, with the exception of some PPI data and the release of the Fed's Beige book. With that, I want to thank you again for watching this week's Markets in a Minute. Don't forget to like, share, and subscribe to get notifications for future video content, and I hope you have a great week.